Hello guys, it's 9:30, so let's begin. So for Saturday webinar, right, we try to start on time now, okay? Because I want to end this webinar fast within like 30 minutes like that, so that when you guys watch the recording, right, there is like you don't need to watch like a 40-50 minute video lah. You can just watch a 30-minute video, very straightforward lah, okay? So now let's begin for the stock market this week. We got CPI data and the PPI data came out. But overall, the market kind of like came down this particular Friday lah. Okay, it seems like it's turning down already. So now you can actually see this on Nasdaq, right? You can actually see this arrow here, 5%, 5.67%, and then on S&P you can see there's a there's a 7.21%. So there's a reason for this, and it is just to show how the stock market, the overall market is performing against our portfolio lah. Okay, so now this Friday, which was yesterday, right? A lot of option expired, but mainly our short leg of the option actually expired lah. So now, let's go through some of the three options that expired. The triple Q strike 425 put option expired. I got $2,400 from it. Burlington March 15 expire. I got 13K from it. So recall for every calendar spread that we are taking, right? Majority of the profit is coming from the short side. Okay, so that's something that you need to be aware. And then Zim March option also expired. For me, I get about $3,250 lah. Okay, so in this case here, right, I do have quite a substantial profit that came in on March 15th. So you can see on my dashboard, my year-to-date ROI is currently about 15.69%. Net profit is about 31K. So I'm actually comparing this against the Nasdaq lah. Okay, so my portfolio is up about 15% like that. Nasdaq is up. Sorry, this is S&P. S&P is up only about 7, and then the Nasdaq is up about 5.67%. So at this point in time, right, we are sort of outperforming the index by 2 times or even 3 times lah. Okay, but not all is good news, because as we cash out all these big profit, right, our open position actually suffered lah. Okay, so if you recall previous week, right, my open position was positive. It was positive 3,000, 4,000 like that, but because all the short leg actually expired and we cash out those profit, right, you can see that my open position actually went down to negative 4.89%, which is close to negative 5%. Okay, so I'm down about $11,000 on my open position. Okay, but nonetheless, right, even if I take this into account, negative 4 points. So whoops, oh my god. So negative 4.89%, right? If I minus it from my year-to-date ROI, I am still up about 11%, which is still much better, which is still about twice as much as what S&P is performing. Okay, so it is not to say that, oh, I purposely TP all the cash out all the profit and then all the losing leave there. It's not really like that. Also, in fact, I mean, it's not up to me whether I want to cash out or not, because these are options that expired lah. Okay, so we are just basically doing our own thing lah. So there's no window dressing involved lah. Okay, so now let's go to the portfolio first. Okay, so the latest trade, AMR, we re-enter AMR again. So for AMR, right, it is doing quite well for now. I do hope that it will continue to drop lah. Okay, so we entered somewhere around here, I believe. Then after that, it continued to drop like crazy, but recently it's recovering a bit lah. Okay, so I'm just gonna let it recover for a while. Maybe it will go sideways before it drops further down lah. Okay, so AMR, nothing to really worry about. If you have the option position, right, you are fine also. I will prefer option position, but unfortunately I couldn't get the option position because the spread was too big and the stock actually moved down quite aggressively while I was queuing for my position. And then in order not to be late to the entry, right, I just immediately go in with a stock position now. Okay, so sometime, right, in the heat of the moment, we have to make certain decision lah. So the next one is JD. So this JD is actually a cash secure put. It's a cash secure put. It's a CSP in short. So what I did was I short sell 13 contract of JD put option. So this is a naked short sell, okay? There's nothing covering it except for my cash. My cash is covering this naked short sell. That's why it is called cash secure, meaning to say I have sufficient cash in my trading account for me to take the assignment if I get the assignment. But the thing is that if the stock fall, right, I do want to take the assignment. I do want to pick up JD at $25. But if JD doesn't fall to $25, right, I will not get the assignment, but I will get the premium. If JD falls to $25, then I will happily take the assignment and I will still get the premium. Okay, so it's like a win-win kind of situation. But unfortunately for JD, right, the premium isn't a lot. So of course, it was only entered very recently, so the time decay is not taking effect yet. So you can see I'm only up about $130 on JD lah, okay? And now next one, you can see Burlington here, the Burlington long leg. This is the long leg. I'm down about $2,520, okay? So the long leg is actually negative. But if I were to exit the long leg on Monday, right? Monday market open, I don't care how much I'm losing here. Maybe I'm losing 2.5K, 2.3K, 2 or 3K, I don't know lah, okay? If I just exit this position with a loss, right, what you will see is that overall, my Burlington is still massively profitable because I got quite a significant amount on the short leg. Okay, so if I take about $3,000 loss from the long leg, I am still up about $10,000 in total on Burlington. So that is how calendar spread actually works. You want the massive profit on the short leg. At the same time, you want the stock to move in a way that your long leg doesn't really lose so much. Okay, so that is what happening here. So SEMR, nothing much to say. I'm just going to leave it there. I'm going to wait for the short leg to expire. Once the short leg expire, I see what I can do with the long leg. Okay, so now the other one is triple Q put option. The triple Q put option at strike 195, right? This is for April expiration. So for this, right, I'm actually down about $4,500. But once again, right, even though it's down about 4,500, in fact, if I want to consider it like net profit and loss, right? Actually, I'm not really down at all because previously I took the short leg on the very first trade. I got about 2005, and then the short leg on the most recent trade we just expired yesterday, I got about 2004. So I'm actually up about $5,000 here, and the triple Q is down about 4,500. So net total, right, I'm still up about $500 lah, okay? So in a way, right, we are basically holding this triple Q put option for somewhat like free lah, okay? You can consider it free lah if you want. So going forward, right, you can actually see that the stock market is at sort of like coming down, and then we got FOMC next week, right? So if let's say this continue to crash during FOMC, and then market kind of like go into risk off mode, everything start falling left and right, what's gonna happen is that our triple Q here is gonna it's gonna profit massively, but at the same time, right, we have also cash out $5,000 on the short, and then after that, if it continue to fall, right, we can cash out even more profit on the long leg. So that's like a double win, okay? So we are kind of preparing for that kind of situation. So you can see how the management of the portfolio is very, very important on how you can actually squeeze out some premium here, squeeze out some premium there, and then not only that, you are also protecting your overall portfolio as a whole. So another thing that I want you to take note is that even though I have cash out the big profit trade here, right? You can see that my overall portfolio, I'm only down about -5%. At no point, right? At no point in time you will see me go more than -10%. Maybe I may exceed a little like -11, but that's like the maximum already. You won't see my overall open position down more than 10%. But while all this is happening, right, I am consistently cashing out all the big profitable trade. Okay, so that's how you manage a portfolio. Next one is Disney. Disney recently I just entered. It is a calendar spread. So this calendar spread was given by Yuan Shen. You can go and take a look here. I took the trade ready lah. Okay, so now of course we have Taylor Swift Eras Tour will be on Disney Plus. So hopefully that will really boost the boost up the subscription on Disney Plus lah. Okay, I'm pretty sure it's exclusive, meaning to say it won't be on Netflix, but anything related to Disney Plus probably it will have lah. For example, Hulu is on the US lah. Okay, Singapore don't have Hulu, but I do believe Hulu do have that particular Eras Tour documentary also lah. Okay, so Disney very simple trade lah. In fact, for Disney, right, I also believe with or without Taylor Swift, right, I think it still have quite a bit of upside to go lah. Okay, so now we are looking at 130 as the next TP level. So Disney, we are so far doing very well because we caught it right at the bottom, and then we got this one, and then hopefully we get another one up lah. Okay, so hopefully Disney will continue to rally like how Netflix rally when it recover from the bottom. Next, the rest are pretty much self-explanatory lah. Okay, Zim, the short leg expired. The long leg, I'm just gonna leave it there first. Hopefully in the next 3 or 4 months, something happen and then Zim can shoot up and then we can actually take whatever profit that we can get lah. Or even if the long leg we can break even somehow, right? That is also good because we got quite a big profit on the short leg already. Okay. So the rest of the stuff, Pfizer, I recently added the strike 30 short, which turned this into a vertical. So on the short leg, I'm up about 1,004 like that. On the long leg, I'm down about 2,007 like that. But then again, right, previously we have took quite a massive premium from the short leg on previous Pfizer, not massive lah, but quite a significant amount, 2,700 like that. So I'm basically also net profit on Pfizer right now lah. Okay, even though the stock is like going sideways, up down, not doing anything, right? By playing option, right, you can get this kind of premium and you can take advantage of all the sideways movement. And the calendar spread actually allow you to capture all those sideways movement in the stock lah. So all the remaining one I'm not really going to go through lah. Okay, because like they have been there for very long already. Lumen Technology waiting for a big rally towards $5. I know it's only $1.30 now, but I do believe that at some point it can go to like $5 like that. Okay. Allergen, same thing. Currently it's at $4.10. Sorry, $4.66. We are waiting for the massive short squeeze to come in, but haven't come yet. So that will probably be like, I don't know when. We can't really predict the timing of the short squeeze, but as long as the short squeeze is not here, right, we will not exit this position now. Okay, anyway, they are not incurring loss also. In fact, Lumen Technology at one point it was up quite massively, also about 30%, 40% like that. It was up quite big lah. Okay, but I will continue to hold on to those stock. So the other interesting one is On Holding. So On Holding actually dropped quite big during the earnings here, drop about 20% like that, but immediately recover. So now we started at the pre-earning here. Now post-earning, we are back at a similar level. So it is as if the stock didn't move like that, but this actually happened now. Okay. So in this kind of situation, right, if you are a stockholder, you'll probably have gone through some emotional roller coaster ride only to be back at like level 0. But if you are playing covered call, I'm actually getting quite a big chunk on covered call lah, $900 lah. Okay, so if I continue to hold this covered call and it goes to 0, right, I will be getting about 1,004 on the covered call. So even though the stock is like doing nothing, right, just crash and then rarely go sideways, right, I will be pocketing that $1,400 lah. Okay, so the covered call is actually quite important in this particular trade in order to sort of buffer ourselves from all this kind of nonsensical movement that the market is making lah. Okay, so now if imagine for every single trade, right, I can squeeze out like $1,000 premium here, $2,000 premium there, right? And I am taking about 80 trades per year, right? If you multiply 80 by $2,000, that is like how much is that? That's like 100, sorry, my maths fail. Is it 16,000 or is it 160,000? Yeah, 80 times 2,000. Yeah, that's about $160,000 in premium that I'm actually getting. And it's not a small amount. It's actually not a small amount. So what this premium does is that it's either letting you take lesser risk, or you can actually play a very big position and it skew your risk reward ratio, because even if you lose on that trade, right, your short leg is helping you to buffer lah. So on those trades that goes in your direction, right, you are going to get 10k, 20k, 30k on all those kind of big winning trades lah. But on those trades that you lose, maybe you will lose the same amount. But if you are playing small position, right, then all these premium can actually sort of provide you with quite a big chunk of additional money coming in lah. Okay, so don't underestimate them. It's like 900 here, 1,000 there, 2,000 there, but end up in the course of one entire year, right, it's actually quite a lot of money lah. Okay, so now I've gone through my portfolio already. So once again, I have 9 bullish position, 2 bearish position. So it's good that I add on AMR as a bearish position. But going into next week, right, we do have FOMC coming in. So I do want to clear off some long position now. Okay, so I'm looking to TP my Burlington on Monday. So I will clear off Burlington. Aside from that, right, I will probably continue to hold the rest. But at the same time, I may add another triple Q put option to sort of double up the triple Q hedge now. Okay, so that if the market fall, I can have significant upside from the put option now. Okay, so even though I may only have one put option on triple Q or an AMR, in terms of lot sizing wise, right, probably the triple Q lot sizing is worth about 2 short position now. Okay, so I'm playing with the lot sizing rather than searching for a new short trade to take. So please bear that in mind also. I may end up adding more to this triple Q position. Okay, so now going forward, right, there's quite a lot of interesting stock that I also want to I'm looking to take also. You haven't take any QQQ trade yeah, probably a different strike, correct. Probably a different strike. If you have not taken the trade, right, then you probably miss out quite a big chunk of what we are doing already. So you can just like take like what the original position that we have posted lah. You can simply just take the trade, but of course you miss out the 2 rounds of premium that we got for February and March already lah. So your risk will be definitely a lot higher. Okay, so now going forward, right, there's quite a number of stocks that I'm looking at, but a few things sort of jumps out, and one of them is gold lah. Okay, and gold have been recently rallying quite big. Now it's currently at 2115. So for the past few days, right, when Bitcoin was rallying like crazy, gold was also rallying like crazy also lah. Okay, so now even though gold have gone up quite significantly, right, there's quite a number of lagging gold mining stock that have not rallied yet. And if you are a gold mining stock, right, with the current level of gold prices, you definitely can profit a lot more lah. Okay, but the thing is that this company, I'm not sure what's going on over there lah. Okay, they are probably lagging in terms of price discovery and in terms of earnings. So one of the stocks I'm looking at is actually Newman Corporation. Recently, it went up a bit, but I think it can go up higher lah. Okay, I think it can actually go up a lot higher, especially when the earnings coming on 25th April. Tentatively, with the current level of gold price, right? I'm sure that they will be able to easily meet the earning expectation lah. Okay, not only that, this stock is like almost quite close to like a very significant bottom here lah. Okay, so I think now is a good time to sort of catch Newmont lah. So now in aside from Newmont, right, there are other sectors that I'm looking at, and that's mainly the construction sector. But when it comes to construction sector, right, I don't really want to isolate myself to the home builder sector lah. Okay, construction and industrial sector is a very very big sector. There's a lot of area that you can look at. So one of the area that I'm looking at is actually copper mining company. And when we talk about home builders, industrial construction, be it residential or commercial, right? Copper is used quite massively lah. Okay, so since we are facing quite a bit of demand in the construction area sector, right? We will be looking at copper demand going up lah. So one stock that I'm looking at is actually Freeport, McMoran. What on earth is that? But anyway, this company engaged in copper mining also lah. Okay, so I am kind of looking at more upside for this. So hopefully this can become like AMR like that before the crash lah. Okay, so in terms of technical wise, right, it kind of broke through this bigger trend also. So these are the two new stocks that I'm actually looking at. And for the short side, we have discussed on Friday that we are also looking at airline companies lah. Okay, so airline companies with inflation going up, with oil prices going up, right? I think airline companies may be due for short selling lah. That's why you are seeing things like Delta Air, United Air, and American Airline here lah. Okay, so maybe these stocks are prime for short selling also, especially when FOMC comes, right? If they say anything hawkish regarding the interest rate, whatever, I think it will affect airline sector quite significantly lah. Because airline sectors are high gearing company. They have quite a big chunk of debt lah. Okay, so anything related to interest rate will probably affect them also lah. So now with all this, right, let's just recap. Next week we have FOMC on Thursday, but it's at Thursday 2 a.m. Meaning to say you have to stay up Wednesday midnight. Okay, Wednesday midnight, go into Thursday, it will be at Thursday 2 a.m. Unfortunately, for this FOMC session, I will not be in Singapore. I'm actually in Phuket, Thailand. So I will not be holding any live webinar for this, but I will be providing an update the next day lah. Okay, when I wake up on Thursday itself. So now this FOMC is important because it is the March one, and for March, right, we have summary of economic projection. So if you decide to stay up to look at the result, right, do go and open up the summary of economic projection to see what kind of interest rate are they projecting, what kind of GDP, what kind of inflation level are they projecting now. Okay, because it will give us a very very big clue on what kind of trades that we should be taking in the upcoming quarter lah. Okay, so that's all guys. Trade decision for upcoming week, I will let go of Burlington. The profit is enough already. I may add more triple Q position to strengthen my hedge. I may go for airline short in order to balance out the portfolio. So I will probably have one long position coming out and two more short position going in, which should balance out this portfolio a bit lah. Okay guys, so that's all I have for you this week. Have a good night and have a good weekend. Bye bye.